Question 5 was the hardest question on the entire paper. You can see the mean score by question is by far the lowest on any of the questions, and it was in the middle of the paper, so it's not like it was because students just didn't finish it at the end. So we really want to review the contents of this question because obviously students had great difficulty with it. So looking at the facts, GHK Supplies reports annually on the 30th of June. All sales and purchases are made on credit, and we've been given some extracts from the financial reports for the last 2 years. So the first thing that we might need to remember is just to pick out some important information. Maybe we need it, maybe we don't, but for every question we always highlight important things. So in this case, we know they report annually on the 30th of June, and we also know all their sales are on credit as well as their purchases of stock. We've then been given information from the income statement, and the only figure we've been given is net profit. So net profit has gone up from 2014 to 2015. In the balance sheet, we've been given just the liabilities and the owner's equity section. So under current liabilities, it seems like we went from having money in the bank to now having a bank overdraft. We've got some accrued wages which have gone down, so it looks like some of those have been paid. Creditors control has gone down, so we've paid off more creditors. We've got a loan to ATM Bank as current. However, in the first year, there was none in that amount. And interestingly enough, it was all a non-current asset in 2014, non-current liability. And then in 2015, it split up into half in the current section and half in non-current. That left owner's equity and capital, and we can see capital went up substantially from 450,000 to 620,000. We've also got some additional information. We've been told the stock levels remain constant, and we don't have access to the stock balance, but we do know whatever it was, it is the same. All drawings were made in cash, so there were no stock drawings. And in April 2015, the owner contributed $95,000 additional capital, comprising $75,000 of cash and $20,000 of equipment. So we can see the capital figure went up substantially. So sometimes that's because of net profit, and other times it's because of capital contributions. So we can see $95,000 of that increase is actually from capital contributions.